Hello and welcome. You're watching the Business Today show with me, Sakshi Batra. First up, the top news we're tracking for you tonight. It's a great start to the peak season with gold imports surging about 40% in August. Could hit government's efforts to control the trade deficit, but signals strong demand ahead of the wedding and festive season. Markets managed to settle in the green after choppy trade. Nifty closes at yet another lifetime high of 20,103. Metals and PSU banks shine while the selling was seen in FMCG counters. Fitch Ratings maintains its GDP forecast for India but warns Q2 growth may moderate as exports continue to decline. Adds that Indian consumers are becoming a little more pessimistic on income and employment prospects. Big tax stops for ETF trading in Gujarat's Gift City. Government to exempt all capital gains from transactions made using foreign currency. Move to help in making GIFT IFSC a global financial hub. Why are the Apple iPhones so expensive in India despite being built in the country? Business Today television breaks down the pricing and tells you exact reason for this. More trouble for former Jet Airways chairman. Naresh Goyal sent to a 14-day judicial custody in a money laundering case linked to an alleged fraud of 538 crore rupees. The 74-year-old businessman was produced in a Mumbai court today. Top tech tycoons meet U.S. policymakers at the Capitol Hill. Discuss the growing threat of artificial intelligence. Elon Musk stresses the need to be proactive, not reactive. Calls the meeting the most important in the history of civilization. And straight onto the top story tonight, gold imports have actually surged in August right ahead of the festive season. According to reports, a day ahead of the official release of the trade data, imports of the precious yellow metal have surged in August to $4.9 billion. And this is a massive 40% increase over the last year's $3.5 billion. This is also in part due to a rise of 12% in overseas spot prices in the year. Overall, demand in India is forecast to drop this year to anywhere between 650 and 750 tons, the lowest since 2020. The surge in gold imports has raised concerns over India's trade deficit, which is already feeling the heat due to rising oil prices. To discuss the prices of gold and its outlook in the festive season, we are now joined by Navneet Damani, Head of Commodities Research at Motilal Oswal Financial Services. Welcome to the show, Navneet, and great to have you with us.
Hello, Sakshi, and thank you for having me on the show.
Gold prices have seen a dip of about 10% from its peak. What is the current demand scenario? Are people going ahead and buying gold much higher than what was the scenario earlier in the first half of the calendar year?
Well, the people whom we connect to and the jewelers we connect to and speak to have not indicated any such great rise in demand per se. They are maintaining that the year has been sluggish until now, and probably Diwali could be one big season, or probably the Ganesh Chaturthi festival could be one season where they see some bit of demand rising up or some bit of pent-up demand rising. Because all this while we've seen a consolidation in prices or a correction in prices. Yeah. And believe me, when there is a sharp correction in prices, people want lower prices and they do not wish to buy it. So if we see a reversal in prices, if gold heads towards 61,000 once again in the near future, you will see a rise in demand. But otherwise, prices are likely to consolidate. The demand is going to be lackluster.
Okay, so what is the demand outlook going to be for the entire festive season that follows? You said that it is going to start off from Ganesh Chaturthi, thereafter Dhanteras, Diwali, we have Navratri also in between. And all of these seasons are really used by all the people out there to buy extensive gold. There are auspicious days as well. So what is the demand outlook for the festive and then the wedding season also coming soon?
Well, the demand, World Gold Council suggests that the demand could be to the tune of 650 to 750 tons this year, which could be the lowest probably the last 3.5 years that we've seen.
Okay.
And to top it up, we've had an extra month where not much of purchases for gold has happened. And that's called the Adhik Maas festival. So I think the next 3 months is likely to see some pent up demand. The first half of the year has not been great in terms of demand, but
Yeah.
the next quarter or so is likely to be very strong per se in demands. There are two aspects to it. One, that the market has corrected by 10% as previously discussed, so people will likely get it at a cheaper price than what they could have got 6 months back. And now the prices are in a little consolidated mode, and people started to realize that the dollar USD INR per se has been sticky around 63, 83 levels.
Yeah.
Some kind of diversification could come from equity to other asset classes. That is why probably next 1-2 quarter looks little lucrative for gold prices.
So it looks lucrative, and the demand, the pent-up demand could actually pick up in the festive and the wedding season. Can that also lead to further increase in imports in the months to follow? We are already seeing a 40% surge in imports in the month of August. We just had about 1 or 2 festive, months, festive days. But, in the months to follow, there will be a number of more days. So do you think the imports will also surge accordingly?
Well, the 40% import is because of the lower base impact that we saw in the previous year. So I don't think we should read much into the 40% import number because of the base impact. This number is looking a little bloated. But the demand could be actual and real, and that is where I think a lot of traction would come in, and some premiums could be coming in for the domestic buyers.
What about the prices then, Navneet? You did say that, the prices have been consolidating recently, but with the increase in demand that you expect, will gold prices also surge higher? They've cooled off 10% already from the record levels. Is that going to encourage people to buy more gold in the upcoming festive and wedding season?
Well, Sakshi, we've seen about 30-35% rally in gold prices over the last probably 30 months. And I think most of the triggers which were tailwinds have now started to become headwinds are facing gold headwinds. We've seen Russia-Ukraine war is pretty much discounted, and until and unless we see a full-blown action once again, it's out of sight, out of mind, that is not going to impact the prices. Along with that, interest rate cycle has started to peak out, maybe another 25 basis point or 50 basis point hike in the near future, if at all. Otherwise, the cycle is likely to turn most likely as we approach 2024. Inflation has been cooling off. We were at around 9% inflation in the US, and currently we stand at less than 4%, which is also an indicator that inflationary measures have worked and are likely to cool off. Dollar index has been pretty consolidated. So all these factors which were the drivers for gold prices have started to now cool off, and I don't see a reason where prices could be headed significantly higher from here on. So if at all they run up, maybe 3 to 5% rally could come in over the next 6 months, 12 months. But most likely it could be a year where you could see sideways to negative returns for gold prices.
Okay, so if you could break this down a little further for all our viewers to really understand this in terms of the spot prices, the gold prices that they are currently, and how do you see the prices moving by Diwali and then by year end?
Well, as I mentioned, maybe 3-5% upside. So as we are trading at the current juncture, we are trading at 58,500 odd. Maybe in best case, we could go to 61,000 levels. But I will not be surprised if we head towards 57,500, 56,000, say probably by the end of the year or end of the financial year 2023-24.
All right. Well, many thanks, Navneet, for being with us on the show and sharing all these wonderful insights with all our viewers. Great to have you with us on Business Today. And yesterday we did a report on the huge difference in the prices of iPhone 15 in India and the United States of America. Today we tell you why. Even though Apple had started the production of iPhone 15 in India, the components still attract duties ranging from 2.5% to up to 12%. But for the iPhone 15 Pro models that will be imported into the country, the duties are higher. 20% customs duty and 2% cess. This means a fully built smartphone unit imported into India draws 22% duties. In the case of the iPhone 15 Pro, it amounts to 20,615 before GST. In all, the iPhone 15 Pro is priced at 1,34,900 rupees, and you will be paying approximately 41,193 rupees in taxes and duties, and the entry-level variant of the iPhone 15 Pro Max that will retail for 1,59,900 rupees. The duties and the taxes here amount to 48,827 rupees. And meanwhile, the Indian Space Agency ISRO has found a place inside the new iPhone. The 15 Pro models are for the first time equipped with NavIC, the Indian version of GPS. Though other handset companies adopted the Indian GPS standards last year, this is for the first time that Apple iPhone is using the technology.
ISRO took India to the moon. ISRO is taking India closest it's ever been to the sun. And now ISRO has made Indian tech a part of the Apple iPhone. The newly launched iPhone 15 series is the first by the Cupertino-based company to support the Indian NavIC positioning technology. The higher-end Pro and Pro Max handset have integrated precision, dual-frequency GPS with the support for the US GPS, Russian GLONASS, Chinese Beidou, European Galileo, Japanese QZSS and the Indian NavIC systems. So what is NavIC? NavIC, or the Navigation with Indian Constellation, represents a regional navigation satellite system comprising 7 satellites and an extensive network of ground stations operating around the clock. It offers 2 services, standard position service for civilian users and restricted service for military users. NavIC is not a worldwide GPS system and its coverage is limited to India and the Indian Ocean. The area extends 1,500 kilometers beyond India's borders. From 30 degrees east to 150 degrees west and from 50 degrees north to 30 degrees south. According to the Indian Space Research Organization, NavIC signals boast remarkable precision, delivering user position accuracy better than 20 meters and timing accuracy better than 50 nanoseconds, outperforming many of its global navigation satellite system counterparts. The development of NavIC was in response to instances of foreign governments withholding critical GPS data. An example of this occurred in 1999 when the Indian military requested GPS data for the Kargil region from the United States, but the request was denied. The NavIC project received a go-ahead in May 2006.
The Indian government has already held meetings with handset manufacturers last year, and several companies including Oppo, Vivo, OnePlus, Xiaomi already support the NavIC standards. There are talks of making the Indian GPS system mandatory for all handsets sold in India from 1st of January this year. The decision was, however, deferred. This is Pranav Dixit reporting for BTTV.
Fitch Ratings has kept its forecast for India's 2023-24 GDP growth unchanged but with some caution. The global rating agency has kept its forecast unchanged at 6.3%. This is despite tight monetary policy and weaker exports. The growth, which outpaces other countries in the region, Fitch says is helped by robust demand and service sector activity. Fitch has, however, warned that the Q2 growth moderate as exports continue to decline and credit growth remains flat. It also added that the Indian consumers are actually becoming a little more pessimistic on income and employment prospects. The ratings agency sees consumer spending also declining to 5.1% in the ongoing financial year as a temporary spike in inflation, especially in food inflation, may actually hurt the discretionary spending power of households. Tech tycoon Elon Musk has renewed his call for a regulator for artificial intelligence at a summit hosted by U.S. senators at the Capitol Hill on Wednesday. Now, the summit called by lawmakers also focused on how the U.S. Congress should actually set artificial intelligence safeguards.
Top tech tycoons arriving for the high-powered AI summit at the U.S. Congress. Elon Musk, followed by Bill Gates, Sam Altman, Alex Karp of Palantir and Mark Zuckerberg. A room full of tech tycoons with a combined net worth of more than 46 lakh crore rupees. It was a closed-door meeting on the Capitol Hill on how the US Congress should set artificial intelligence safeguards.
You tell them that AI is a double-edged sword?
Yes.
And what did you mean by that? Can you explain that?
Well, what, the metaphor?
Yeah. I mean,
Well, if you have a sword with two sides,
when
one side can get you, even though you're trying to get someone with the other side.
Right. When you're telling the senators that, though,
that's how it works.
What do you want them to take away from
I think
that?
it's more important to make sure your hilt is also, you have a hilt, not a sharp thing.
Musk may have laughed at the question of, but he was serious enough to add that the consequences of AI going wrong were severe and regulations needs to be proactive rather than reactive. He felt the meeting could be one of the most important ones in the history of civilization.
I think it's clear that there's a strong consensus, overwhelming consensus that there should be some AI regulation, that it would be in the best interest of the people to do so. And I think we'll probably see something happen. I don't know on what time frame or exactly how it will manifest itself.
Yeah, that's the question. What were they going to do?
Yeah, I don't know what exactly. Perhaps the Department of AI. It probably, let's say, I think the probability of there being some sort of AI regulatory agency that stands on its own, similar to the FAA or FCC, is likely at some point.
It was clear in the meeting that not only American but lawmakers around the world are grappling with how to mitigate the dangers of the emerging technology, which has experienced a boom in investment and consumer popularity after the release of OpenAI's ChatGPT chatbot. Lawmakers want safeguards against potentially dangerous deepfakes such as bogus videos, election interference and attacks on critical infrastructure. Bureau Report, Business Today Television.
And Tata Motors launched the facelifted version of its best-selling compact SUV Nexon. The ex-showroom price of the new Nexon starts at just over 8 lakh rupees. The automaker also has launched the facelift of the electric Nexon with an introductory ex-showroom price of 14.7 lakh rupees. The new Nexon, which has been launched in the time for the festive season, comes with a slew of features including 6 airbags, electronic stability control and a voice-assisted electric sunroof. Business Today Television's Chetan Bhutani spoke to Tata Motors MD Shailesh Chandra about what the festive season holds for buyers.
A 90-day festive period is upon us with 2 new vehicles on the market, sir. What is your outlook on the festive season? Many are saying a 1 million sales mark in the 90-day period. What is your outlook and how optimistic are you now?
I would not quote any number, but what I am clearly seeing is that South we are already seeing the festive season on, and the demand show is very strong. And I believe that that should augur well for the festive season across the country in the next 60 days. And in any case, in a 3-month period, festive season is a 90-day period. We are seeing every 90 days the industry is selling 1 million. So that should not be a problem, I see. The demand should remain strong because there is good supply. There are new launches which have happened in the market. And there is a lot of interest you are seeing in the consumers. So it's a good mix and perfect mix, I would say, for a good festive season too.
And Hyundai's Mini SUV Extra has hit a sweet spot, pushing sales in August to record highs for the company. In a conversation with Business Today TV's Chetan Bhutani, Tarun Garg, COO of Hyundai India, revealed the company's plans for the festive season.
Extra has really hit a sweet spot, and in fact in H1 SUVs used to contribute 54% to my sales. But now, after Extra, SUVs are contributing 64% to my sales. I've already received close to 70,000 bookings for Extra. And mind you, these bookings have come when there is no pent-up demand. These are fresh customers, serious customers, and we are very, very happy to see the response. One of the key reasons has been 6 airbags are standard. Key reasons has been 75% of the bookings are sunroof. People are liking the dash cam. People are liking really the space in the car. There is so much of headroom. So as long as you bring a right product, which hits a sweet spot at the right price, it has the right safety, I think the product will sell. Clearly the SUVs are the way forward. At the same time, you can see that even an entry-level SUV has such a great traction.
Sir, also I'd like to ask you on the festive period in sales now. We have close to about 90 days of festive season going on. How are you anticipating demand now, sir? Because the big festivals are yet to come. So how do you think the demand would be? What percentage of number would you like to share this?
So first let's get the percentage away and then I'll tell you some perspective about the festive season as well.
Sure.
So of course Onam has started on a very positive note. I think we are expecting a double-digit growth because Onam is seen in August plus September, because sometimes it is in August, sometimes in September. On a good base of last year, on a high base of last year, a growth of 10% is very good. I'm expecting the festival this year to definitely look at, I'm looking at a growth of 9 to 10%, which is again in line with what we have been witnessing January to August. I think one good reason for that is a better availability, because last year we were all sitting on a stock of 10-12 days, especially Hyundai. This year Hyundai is sitting on a stock of 20 to 25 days, which is a very healthy stock, which means so many customers who decide to buy in the festival can also book and buy. Because Creta, which used to be on a waiting period of 6 months, the waiting period is now about 4 to 8 weeks. Even when new waiting period has reduced to 4 to 8 weeks because of the improvement in supplies. I think this is a good festival season for the customer. Like I told you, most of our product portfolio has been refreshed, which means good products, good stocks, good auspicious time to buy. I think everything is going for us. Yes, we have to be wary about some of the stress because of the erratic rainfalls, inflation, high interest rates. But I think all in all, there are more reasons to rejoice and be optimistic about than negative factors.
Sure, sir.
And with that, we will wrap up this special edition right here. Many thanks for tuning in and good night.